Assalamualaikum warahmatullah. Welcome back to our analysis of murabah financing. I have mentioned a couple of times earlier that the use of murabah financing in Islamic banking can be very challenging because the rule of sale, whereby one cannot sell, one does not own, is a very important principle to uphold in any sale transaction, and this holds also for Islamic banking that uses the principle of sale in many of their financial products. But then to conduct sale, it implies that the bank must be the rightful owner of the object prior to the sale, which means that the asset must be on the banking book, and this can trigger high capital charges because of the fact that holding asset on their banking book can be very risky, as the value of this asset may come down due to market volatility or the lack of any purchase undertaking that will require the customer to purchase the asset. And therefore, the fact that this murabah financing has been around for many years, and there's likelihood of Sharia non-compliance risk because of the fact that banks do not hold ownership of what they sell, even if they have announced the selling price or the sale price. It implies that the bank, as the selling party, must be the legal owner of the object before making the credit sale to the customer. So in order to circumvent or to avoid this issue of ownership, which will not be ending soon, the Tawaruq contract was introduced to rescue the bank from further problem in doing credit financing, and this is where we would like to look into some dimension of Tawaruq financing. There are many countries today that are using Tawaruq, for example, Malaysia, Brunei, and the Middle East, Kuwait, and many other countries in the UAE. And the Tawaruq financing will allow the bank to avoid being involved in the buying and selling of the asset that the consumer intend to use. For example, consumer want to buy a house or landed property, or to buy an apartment for them to stay. So this requires the bank to enter into a sale and purchase agreement with the developer, and that would be a problem, as we said earlier, because when the bank buy the apartment using deposit fund, then the risk will be quite large because the asset value of the apartment may move up and down, and this is what the bank is trying to avoid, to face losses due to asset decline due to market volatility. So many banks would refrain from buying asset directly from the developer or directly from the previous owner. So the way to avoid this issue is by using Tawaruq. And as I said earlier, that Islamic banks are not able to do asset financing because of the high capital requirement charge on the holding of physical asset on their book. For example, if the asset is for resale, that will come under market risk. The capital charge will be 15% multiplied by the exposure value. Or if we were to look at it as a credit financing, then the credit risk weight accorded to the purchase of asset is around 187%. So that is quite high, and that is why many banks would find it not viable to use murabaha, due to the fact that this modality is not sustainable for the bank. So by using Tawaruq, Islamic bank now will provide cash or liquidity to the consumer instead of buying the property directly from the developer. Now all the bank will do is to facilitate a transaction where the bank will provide cash or liquidity to the customer so that the customer can purchase the asset directly from the supplier themselves. Okay, so this is like a customer getting a loan from a bank, from a conventional bank, and using this loan or cash proceed to purchase the object directly from the supplier, right? And this cash in Tawaruq are generated from the sale and purchase of certain commodities that can be traded in the system, such as copper. Copper was first used in the London metallic exchange when they first used, but it was called commodity murabaha earlier. And in Malaysia, CPO or crude palm oil, and some plastic resin and some other commodity can be used to facilitate the generation of cash, to be facilitated to ensure that the customer is able to purchase the asset for them to use. So at this, I think at this junction, we will stop here, and inshallah we will carry on to discuss a bit more on the murabaha, on the Tawaruq financing. I see you again. Please don't forget to comment, subscribe, and to share the videos with your friends. Thank you very much. Assalamu alaikum.